Hello everybody, this is the weekly review. It's June 28th. We're going to take a look at quite a bit of stuff today. We've got the Greek situation starting to put things in motion in Europe. The decision there is no decision, and we're probably going to see a default on Tuesday, and we're going to see the fallout of that this week. It's been a kind of a slow train wreck taking place. You thought, or at least I thought, that like always there would be some final decision, some stick save, if you will, but it doesn't look like it's going to be that way. So now the question is what is that fallout going to look like? And today we're going to, depart a little bit from the way we usually do and spend more time looking at what we expect to happen, what those various levels are where we have to be concerned. And, it's not about being fearful, it's about being opportunistic as this unfolds. So, to do that, though, of course, you have to realize the risks that are on the table, and you have to be able to make some decisions about what levels are important and watching those levels and how the markets react to those levels. So today we're going to be focused more on that than on what happened. So if we do look quickly here at what happened down week, still up on the year, but nothing special. Breakouts on the NASDAQ, the Russell's held, so that's actually a good thing. But it came at the price of more volume, big volume expansion. You had the Russell rebalancing, so a lot of volume came in. When you see that kind of action, right, even though it held this retest regen zone, when you see that kind of action, that says, hey, you're probably going to test it again. And of course, what better case than that than the situation economically where Greece is probably going to default. So that looks like a retest. If you look at it on the weekly, also tried to get over the high, closed underneath it, had less volume, right? So it's a failure on the weekly. Again, that's two in a row. Again, that's not good. It's not horrible, but it's not good. Now, if we look at the Russell, of course, the small caps, more domestically situated, doing better. They came back in to do the retest regen off this bar. Again, volume expands off the Russell rebalancing. Test into it, you hold it, but you hit more volume, you're probably going to test it again. If you look at it on the weekly, it's actually a breakout last week. You go over, back under, you have slightly more volume, that's positive, and you're coming back in to do a retest regen off the weekly. 1278.63 was the high, 1274 was the low, so you're testing into it immediately. That says you can get to the other side of the bar. Well, that is 1248. And if we go back and look at the daily on that, 1248 takes you way back into here, which would be a break of that level. So again, they keep pushing higher, but they keep getting sucked back in, and a lot of that has to do with the divergence, right, where we have fairly significant divergence between the listed issues, and I'm talking about the S&P 500 and the Dow Jones. Those haven't been able to push higher, and we're also having divergence even with the NDX, and most of this has to do with Apple, and we'll look at Apple when we go to the portfolio. So the main thing to realize here is that the potential for the larger declines, right, is still on the table. The structure is there. So let's look at the S&P and let's try to understand what I'm talking about and why we have to monitor this seriously over the coming week and weeks. So for those of you that are newer to neoclassical thought, there's an underlying structure to the markets, and that underlying structure is that you can't get larger declines unless you actually get a break of multiple swing points. I mean, that's typically how it occurs. And so what I'm saying here, for example, is this swing point low, this one, and this one. There's actually another one over here, right? They've set up to where they're all together. In other words, they're all kind of nested in there at the same kind of general price level, and that's this support zone down here. And that level, if broken, can lead to a faster decline. Now, it really takes place, the faster decline can take place when you not only have multiple swing points on one time frame, but you have it on multiple time frames. And so if we take this and we move over, so this level again is about 2068 to about 2071. If we move over and we look at it from a weekly perspective, that level on the swing point low here, that level is this bar's low, and that's 2068. So again, you can see now that those levels that we just pointed out on the daily also exist on the weekly. And underneath that, not too much farther down, is another level on the weekly, and it would be multiple swing points on the daily, even though those have kind of pushed off to the left side of the chart. That price point's 2045. Now we're trading right now at about 2100, 2101 to be exact. This level again, 2070, 2068. So we're talking about 30 points. But 30 points is not that much. So in other words, we could get down there and start breaking these levels. And if we do, you could get the faster decline. What is that faster decline going to take you to? Well, it's probably going to take you to the next set of levels, which are down here at this support zone. And so what you can see is that a break of the swing points that are up at this 2070 level, which is about right there, right, could lead to a faster decline into this next support zone. Now, if it happens that way, let's just make the assumption that you get the break at this level and you cascade down to here. If that all takes place on one fatal swoop, in other words, you just break lower, 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 right, the odds of a bounce at this level is fairly high. And that would do what? It would set up a bearish retest regen off the prior swing point lows, and depending on how it comes back, you could see how that test could potentially fail and eventually break and take you down to the next set of levels. Now, for this to become a bear market, you have to break on the long-term time frame. That price point is way down at 1820. So now 1820, if we go back to the weekly, 1820 is this October low. That has been actualized right on the monthly. But to get to there, you got to break these swing point lows, which also would be multiple breaks on multiple time frames. But as I just said, if you get there the first time and it's a straightaway move, the odds of bouncing is fairly high. And so when you look at it from this perspective, how could we, turn bearish in these markets? Well, to do that, it's going to require a lot of work. You're going to have to trade down into these lower levels to start with, probably on a direct move, get some sort of a bounce, get another direct move down, right, that could take you somewhere in this level, get another bounce, get another, you know what I mean? It's going to take a while. The odds of it just going like that is like very small, because we're talking huge amounts of points to get there. Can it do it? Sure. That's, from here, the break of this to the test of this area here is about 10%. So it's about 11% from where we're at. Can you get that kind of straightaway move? Certainly you can. It's not impossible. I mean, just look at the one back here where we came off this high. That itself was about 7%, and it was all done in 4 straight weeks, one after another. So could we get 3, 4, 5 weeks straight down? Sure we can. It's always possible, and if you start breaking things, it can occur. What should we be worried about? Well, we should be worried about the first swing point break on multiple time frames. If that occurs, it's the market telling you, it's the market putting you on notice, right? That worse things can happen. So that's the level that we have to watch first, and that's the level that we should be focused on to begin with. Now, the other thing that's happening in conjunction with this, and has been happening, is the mean time to failure. Mean time to failure is just a method of allowing us to tell what the probability of some sort of a transition in trend is. Because of all the Fed, and central banks around the world, all of their intervention, the long-term time frame, right, has been stretched beyond belief. At some point this will break, but the model never took into consideration, because it didn't exist at the time, never took into consideration this extraordinary central bank intervention that has allowed this market to do what it has done. When we, factor that in, I guess it's not unreal to see these things stretched. And stretch to me is anywhere you get around 70-80% on one of these, you're starting to get stretched. So you just have to kind of discount this not giving us any clear signals on the long-term time frame given the intervention that's taken place. Now, on the shorter term time frames, it continues to work. And if you look at it on the intermediate, it's at 65. So what this says is for us to get a break, a trend transition on the intermediate term time frame, right, we're getting to the point where it's stretched. Now taking that back and looking at it again in terms of the chart we were just looking at on the intermediate term time frame, a break of this level will transition it. So in other words, if we get 30 points down, this is going to transition, and as it gets stretched up here, the odds of that happening become greater. So we can see that that's the case. Now, what's fascinating or what's interesting is the way it's set up. You're not stretched at all on the short-term time frame, right? Just transitioned recently, and so it's got a long way to go. So there is the potential that somehow a resolution still takes place, or, in Greece, or that somehow it's contained. And so that possibility is still on the table when you look at it just from a purely mean time to failure perspective on the charts. Another thing that's taking place that we should be concerned with is that the sector strength continues to deteriorate in a slow way. It's just like the Greek situation. It's kind of a slow train wreck. The financial's still holding up, the discretionary still holding up, and you still got healthcare. Those three are holding the listed issues up. Unless they start to roll, right, this thing's going to have a hard time selling down. Now, on the bearish side, interest rate sensitive stuff has been killed, utilities, bonds, so forth. Technology has rolled over, which is a big piece of it, which is what's happening with, the fact that we can't go up. And you also have industrials, the basic materials, and energy all bearish already. If you go to the weeklies, you're starting to see the rolls. You've got the utilities already rolled. You got energy that had rolled previously, got a bounce, but can roll right back down. You've got the staples, which have already rolled. So you have deterioration. Now you have some others that are very close. For example, technology is getting close to rolling. Industrials are getting close to rolling. Basic materials, all of them. If these start to roll over, the odds of that break on the intermediate term time frame become much greater. So you get deterioration in the individual stocks, which has been happening. Slowly starts to transition what's happening. Well, it does it first here and then farther out, which eventually can affect the long-term time frame. So, when you think about it from that perspective and you look back at these charts, what you have seen and what we continue to see is this continuation, right, where this is kind of a slow roll, rounded top, right, continues to take place. What happens when that happens? Well, these things, right, these swing point lows all become nested at higher and higher levels, which are not that far from the current price point, which allows the potential for a larger break to the downside. So the structure is slowly building out to allow a larger time frame. Now, how do we keep that from happening? We go higher, right? We break higher. But so far that hasn't taken place, and right now we don't see the catalyst for that to take place. Do note that we have earnings coming up in a couple weeks. That could be a catalyst if they're much better than we expect. We've also got the Greek situation coming to a head. What if some sort of resolution takes place that somehow keeps everything from falling? Something comes about that makes that better than we think it's going to be. We've got China already lowering their rates to rescue their markets. So, you can see the potential for something to be positive and allow us to move forward. So you can't get too negative too quick. You have to let the structure start to break to allow you to, to make that decision that yes, this is for real. In the meantime, you be careful. That's what we've done for multiple months now, right? As this thing has trended off into a sideways trend, which we expected 3-4 months ago, we got a lot more careful as a result of it and have maintained that carefulness as a result. That's what you have to do. That's the reward risk situation where you look at the probabilities and you say, the reward just isn't as great as the risk. And so that's what we've been doing. So, I've spent enough here. I wanted to lay that out one more time. The risk of a larger decline is on the table, but it hasn't began to actualize. Until it does, we have to assume that the trend, which has been in effect, still is in effect, right? And until we get further evidence that it isn't, we have to believe the trend will continue. At some point, that will prove to be wrong, but so far, we don't have the evidence to show us. It may happen this week, but right now, it's still not there as I speak. So the technical positives, they're what we've already talked about. You've got the breakouts here. You got the European markets and the U.S. markets failing to bearishly regenerate. And I didn't actually show that, but we talked about it all this week. So we had the push up here that nullified this bearish retest regenerate. And even though it just barely got over it, now it's back in it, right? It did say, okay, this is still sideways, right? More so than this downtrend that was in effect. Now, can it roll back over, start breaking swing point lows and do it all again? Sure. But, in the meantime, this thing had, kind of taken out, if you will, this bearish retest regen, which that level was about right there. We got over it. So that says sideways again, at least on this time frame. If we look at what else happened, the European markets did the same thing. So let's pop over. We haven't looked at those yet. Let me grab that chart or those charts. And if we look at those, right, and if we look at, we'll just start with France. It's much stronger here than it has been. And of course, a lot of that has to do with the expectation that you'd get some sort of a save in Europe on the Greek situation. Now the question is okay, what does this do? And I'm going to talk about levels next, as we get farther here, so I'll just leave this chart up, and we'll skip to that in a second. But, this was a very positive reaction. We stretched the boundaries. We get a positive reaction. We're kind of hanging up here. But now the question is going to be what happens off the failure to reach a conclusion in Europe this week. The negatives, the listed issues, the NDX were unable to press higher. I just talked about that. And Asia continues to trade lower. And I haven't looked at Asia yet, but let's look at it, and in particular Shanghai. So we had a fairly decent melt here. This now has set up, of all things, has set up a large ABCD structure to the downside. Now, if this fulfills, this is going to be a big decline way back into these levels. Is it going to happen? Well, we'll have to see. Right now, you have a break on this swing point low and that one, which has turned this into bearish on this time frame. If you step back though, this is a range trade. We talked about it. At some point would be a range trade. To actually make that break, you need to break on this time frame. 4187, haven't done it. Volume's declining as this is coming in. So you're not having volume expansion as this comes in. And you just had the People's Republic Central Bank come in and cut rates again to try to save this market. Folks, this was a huge decline. It may not look that big from here, but it's almost 20% already in 2 weeks. Now, recognize that it went up a huge amount. Can this thing trade lower? Yes. Will it trade lower? I think there's a good chance that it will. Will it do it immediately? Probably not. Probably not unless that situation in Europe just cascades out of hand. I mean, that could potentially press this even lower. So that's Asia. Nikkei still pretty strong. And if we look at the Hong Kong market is actually coming in. And what this does is usually based on what Shanghai does. So again, can these expand? Sure. Will they do it immediately? It's not known. We'll have to see how they react to what's happened this weekend, both in Europe and in Asia. Fundamentally, then a positive China, negative is Greece. What do we want to expect? This is what we really should focus on. These are the things that I think should happen based off of what's happened this weekend. We should see a flight to safety. We should see the bunds and the bonds get buyers. We should see the utilities and the dividend stocks see a positive reaction on a relative basis. A flight from risk. All of the high flyers ought to be under pressure. So anything high flying should be under pressure. We should see metals. We should see an interest in metals, and we should see the dollar favored over the euro. Those are what I would expect. What we should watch for is extremes. If we see extremes in any of these, if they just go in this direction and they go in a in a reasonable manner, then it's probably going to be contained. If they start stretching in extreme ways, huge volatile extreme moves, then something larger probably is afoot. What's the unknowns? Draghi 3-4 years ago, he said, we'll do whatever it takes. Well, it's time. He's going to have to do whatever it takes. And that means he's going to have to support the Greek central bank this week into that vote on Sunday. And if he does that, this will probably be contained this week. If they pull the plug, all hell could break loose, and it's hard for me to see them doing that. Then, of course, it's the vote. What do they decide to do? Do they come back to the table or do they walk away? And that's going to depend on what that vote is. That vote looks like it's going to be to come back to the table, but anything can happen this week. So it's going to be a crazy week in terms of the news flow. The technical levels to monitor, I just talked about those. I'm not going to go back to the chart, but I talked about that 2070, 2068 area on the S&P. If we start breaking those levels, something larger is afoot, and we have to be even more careful than we have been. And in fact, we'll look for opportunity off the brakes, but at an appropriate time. But those levels, if they start breaking, that's going to be tough on anybody holding any serious amount of stock. The European levels. Let's go back to Europe, and let's bring up the CAC to start with. If I look at it, what levels should I be concerned about here? Well, on this particular time frame on this chart, the levels I would be looking at is this gap level, right? You got a little support zone right there. You can barely see it, right? Actually, you can see it. It's this level right in here. So that level, as it comes back and all the way down to the swing point low where it fills the gap, I would expect it to fill this gap and get back into this bar. That's the bar that has volume. It's also the low of the prior swing point low. That would probably be the target area, and a trade back into that area would actually make sense. That number's 47.99, so roughly 4,800 on the French CAC. That's 200 points lower, so that represents about what is that, about 4% or so. That would not be a surprise to see it move into there. If it moves lower, then something larger is afoot, and then you have something larger potentially here. And what I would be looking for if we get the larger move down is, does it trade back into that breakout bar, which is here, which also is going to be the first time back to do the bullish retest regen off the prior swing point high break on this time frame. Folks, that's almost always a buy. So this area is almost always a buy on the first time back after more than 6 bars. So to me, is there a chance that we get here? Maybe not this week, but maybe a little bit farther down the road, and it should be a buy when we get there. So if they come straight back, it's almost certainly a buy. If they mill around and they take a long time to get there and then do a little bounce, then it can become more dangerous. So like always, it depends on how it gets there and how it trades. But those are the two levels I'd be watching. It's the same on the DAX, just a slightly weaker scenario. That's going to be the trade. If you project this just from an ABCD structure, assuming this is going to turn and go down, which it should tomorrow, that also projects you to get into this bar, into that retest regen zone. That's on the weekly time frame. That's Europe. If we go back to here and look at the rest of it, is Asia. if I look at the ranges there, the China putting in a, is, for me, the thing is, does China trade higher independent of everything going on in Europe, given the interest rate cut? The expectation on my part is that it stabilizes here, and this is the bottom of the range, given the interest rate cut. The possibility is that you get a lot of bleed from Europe, and that doesn't take place. So that's what I'm looking for in Hong Kong and China. Are they putting in the bottom of the range right now? And then on Japan, it's a little bit different in that Japan is coming back. It's really the strongest index in the world right now. It's coming back in to do a retest regen off this swing point high. Now we're on the short-term time frame, so I don't want to put too much weight on this, but that is where the volume is. I was surprised that it traded over it this week to begin with, so I'm not going to be surprised if it trades back under it either, because I think the odds are good for that. And if we look at the weekly, what does that mean? Well, you don't have any retest regens because this thing has just been going straight up. But what you really do have is you have all this volume on these bars. I would think the bottoms of those bars is probably the key area. That's kind of where the congestion is as well in this area here. So I would be looking for it to trade back into those levels. And those levels are about, let me get the lowest one, is about 19,467. So 19,467 kind of seems to be the key area, and if I bring the chart back up, 19,467 would take you deep, way back into this zone. That's where the support zone is. That's where you have to expect if it starts to break down where it would trade to. But again, like I've said, it really depends on probably what happens in Hong Kong, which of course is dependent on China, and of course also dependent on how either in hand or out of hand Europe gets. So I know that's a lot, but those are the things I'd be watching this week and trying to consider. We got a lot of data. We got the Greek situation. You got a fresh set of economic data coming in. It's the end of the month. We're also closed on Friday, and so with Friday being a closure in the U.S., that's going to make it very interesting coming into that closed day because you've got the Greek vote on Sunday. So I expect this week's going to be very volatile, and it should be volatile as a result of everything that's happening. What's the bottom line? Economic systems, in my opinion, are unstable to begin with, right? They're dynamic, and because of that, they're unstable. And what governments and institutions like the central banks do is they try to keep the balls in the air. You're always trying to make things expand and continue higher. Sometimes somebody drops a ball. It's an uncontrolled event, like Greece deciding that they're going to walk away from the table, their politicians, and put it to a vote. I mean, that's not what anybody expected, but it has happened. That creates an unstable situation, becoming even more unstable, right? And that's where we're at. So the decision to do this could cause a ripple effect, right? We could see a ripple. How the other institutions handle this and what they do in response to this, of course, will either magnify or minimize that ripple. But the ripple is in effect now. ECB has to come to support the Greek Central Bank this week, or it's really going to become a panic. And then that, of course, is going to become very unstable. So that, to me, is the major thing. ECB is meeting today and deciding what to do. It's hard to see that they're going to back away and not support the Greek Central Bank this week. But, anything can happen. You have to just see what they do and what the reaction to it is. Most likely, they're going to be technically in default on Wednesday. The IMF response is going to be big. What do they do? Again, you can see how the ripples play out, and the actions and reactions to those ripples are what's going to move these markets. You can't judge the effect just simply by saying, oh, well, if this happens, then that's going to happen, blah, blah, blah. What you really have to do is look to the markets to tell you. Does the money try to escape? Do we find sellers at lower and lower prices or not? If we do, something larger is afoot. If we don't, it's telling you that those levels really still look fundamentally important, and the market is going to buy those levels. So that's what we have to look at, right? How does the money react at key levels? And I pointed those levels out above. From a strictly neoclassical perspective, if we start seeing breaks of multiple swing points on multiple time frames, then the danger levels are increasing. That is what you have to believe, because that is how larger declines take place. Until it happens, though, you got to be careful, not fearful. So don't fear the worst case. Just be careful, which is what we've done for a long time now, and what we will continue to do, and more so if we need to. But don't be fearful. Don't assume that everything's going to go to hell in a handbasket, because most of the time it doesn't. Looking at the portfolio, what do we got here? You know, we've been maintaining size. We've been as low as 25, as high as about 50. We're right at about 50 now. It may prove to be the wrong time to be 50, but we don't know that, and we'll simply have to monitor this week and decide if that's true or not. This week we added PANW, which is Palo Alto Networks. It's a very strong stock in the security space. We did partial sells elsewhere. Amgen, this was a trade. This trade we may have to abandon. We'll just have to, judge the market. We still got the gold spread. It's done nothing since we've added it. PANW, Palo Alto, we just added, is a premier stock in that space. Let's take a look at a couple of these things. We'll look at Palo Alto, and I'll show you what I'm looking at there. And then we'll also, of course, focus on Apple and another one as well. So let's go to Palo Alto first. So let me grab the chart, and here we go. So what do we have here? Well, we've got a huge run up, right? Now you're getting the first retrace. Volume expanded. I don't like the way this expanded. I may try to flip out of some of this early because the real support, if everything starts going to hell in a handbasket, the real support is going to be back here. So it's going to make a lot more sense to buy it that deep than to buy it up here where we just bought it. At the same time, this has been a very strong stock, and if the situation in Europe is contained and this little area here, right, serves as support, it may be a point to buy some more, but we have to be very careful about adding at this particular level, right, because the real risk is that this thing could trade lower. So buying here versus buying there is a lot more risky. Of course, we want to buy here if at all possible. Flipping it would involve these bars, the lows right in there, and now that we had this big bar down, right, it would be the top of that bar. So this zone right here is the area to try to sell into if we need to sell. But we'll have to judge what happens elsewhere, because that's infecting our markets to a great degree. Nothing here. We just missed the exit one more time. We tried one more time to get out. It's the strongest sector or index around the world, so I'm not too worried about it. I certainly would like to take profits where I can, but we missed it again, so that's the way it goes. Apple to me is probably the key stock this week, and the reason for that is Apple, just like the general markets, has set up the potential to break on multiple time frames. And so what I'm looking at here, we've had two or three things happen. One is we had a zone here, right, this little zone, that we could not break over. We tried here, we tried again, we failed both times. That was the place that you would expect the sellers to step up and sell. That's what they did. That tells you it's going to try to move into the support zones. Now, those support zones have multiple swing point lows on them. We've got one there, you got another one here, you got another one over there, and you've actually got one more over here. So there's four of them. What does that say? That says that this whole area is extremely important. And actually I drew it too low, but you get my drift. What I'm saying is this zone, these zones, actually I'll leave it there because you've actually got the lowest one. So the 123 level up to about 126 is the key spot on Apple. If we break under here, we're also breaking under multiple swing points, multiple time frames. And what does that suggest? That suggests that you're going to trade lower. And so Apple, there's no way I'm going to add at these levels. If anywhere, I'm going to add into the top of this bar and into that retest regen, which is what? The first time back after more than 6 bars, makes it a very strong level of support. So if I'm going to add somewhere, it's going to be there. And so that's the level we want to look at, right? Back into these two areas. That's about the 116, 115 area up to about 120, 119 or roughly. That's where you want to look at it on Apple. And if you break, you could get a fast move right to that zone. That would be the add zone, especially if volume doesn't increase. That's Apple, and that's how we could go lower. And I want to take the rest of these. You know, we're on hold here in EWH. We're on hold in the Euro. We're on hold in Germany. We're also on hold on the NXPI, even though we'll probably stop out there if we start to cascade lower. SBUX we simply want to buy when we get another chance. Asher. This is the Shanghai. Now, we just looked at the Shanghai index. This looks a lot worse than the Shanghai index. As it comes back, and let's go here, you're seeing volume expansion. You're seeing people flee this index. Can it trade this ETF? Can it trade lower? Sure it can. Can it expand all the way down? Yeah, but that depends on Shanghai doing it. If Shanghai holds, it may be time actually to add here. And that will be a judgment call tomorrow based on the way Shanghai trades tonight. We'll look at it. Don't be fearful of these stocks. Recognize that they have had huge runs and they're going to have huge ranges as they develop. Those ranges are very playable and should be played, but you have to be careful where you take your second position because you don't want to do it too early. Can it trade back up to here and do a retest regen bearish? Yeah. And matter of fact, is it going to? Very likely. Question is where does it start from? Does it start from here or does it start from where it's at now? That's the question. That's the question we'll have to try to answer as this week unfolds. And that's about it. So a lot. The show's long tonight. I'm going to stop it at that. As always, don't be fearful, right? Just be careful. And if there's anything I can do to personally help you, just let me know and I'll do my best. That's it for today. Take care, and I'll talk to you this week. Good night.